Welcome, I'm Ernie Goss, research faculty member here at California State University, Fresno. And speaking for the Craig School of Business, our monthly survey of businesses across the metropolitan area, that's the Fresno metropolitan area, what we call the San Joaquin Valley Economic Index. Now, what the heck has been going on the last month? Of course, today, this is the first business day of the month of September, and this survey covers businesses over the month of August. Now, what happened for the month of August? The overall index was above growth neutral for the 21st straight month. So this economy, this San Joaquin Valley economy, of course it's the 4 counties that make up the Fresno economic area, and it's been moving forward positively for 21 straight months, and we're seeing some pretty good numbers. Now I have to say the overall index was down. It was down from July's 57.1 to 53.9 for August, but still above growth neutral. Now the index spans 0 to 100. Anything above 50 is growth positive, below 50 is of course growth negative and pointing to slower growth. Now what does this reading for the month of August say about growth for the rest of the year? It says it's going to be positive. It's going to be a little bit slower in the next 3 to 6 months than it has been in the previous 3 to 6 months. But that's not so bad for Fresno or the San Joaquin Valley. What we're talking about is the economy has been growing at a very strong pace over the last 6 months to a year to even more, a year and a half. And as I said, it's been above growth neutral for 21 straight months. Now, hours are up, a lot more hours. Workers are working more hours, and manufacturing is going great guns, expanding output, expanding jobs. Wholesale trade is also doing very well for the San Joaquin Valley. Now here I'll bring up the actual a graph of the index, and you'll see the index there in red. That's red for the San Joaquin Valley, and you see it's quite significantly above the U.S. number. Now the U.S. number for August will come out later on this morning, and I expect it to be down as well, and that's troubling because the U.S. numbers are getting close to growth neutral and even below growth neutral. It could move below growth neutral for the month of August. I expect it to be down close to growth neutral. One of the big important features coming out of the August report is the inflation gauge moved below growth neutral. Now normally you'd say, hey, low inflation, that's a good thing. Not so much now. This is a wholesale inflation gauge moved from 56.8 in July to 49.8 in August. That's not good. Meaning the Federal Reserve is concerned about declining inflation or disinflation, inflation rate moving lower. Now that's a concern. Now if they see inflation coming down even more, what I expected was a rate hike in September. It's not going to happen. If we see inflation gauge moving even lower, and our inflation gauge did move lower, the U.S. Institute for Supply Management inflation gauge, that one's moving lower as well, and I'll talk about that shortly. 60% expect no change or decline in sales prices of their products over the next 12 months. Now that again is a negative in terms of, and we'd like to see a little more inflationary pressure, meaning the economy is heating up or at least getting a little more charged, I'd say. Now employment gauge falls from 54.8 in July to 54.1. That's still a pretty good reading. Companies in the San Joaquin Valley, as I said earlier, continue to add jobs. Now what's we ask about the biggest economic challenge to your business, that's the survey participants, over the next 12 months. Rising regulatory pressure, or cost I should say, about 26.7, about 1/4, say rising regulatory costs. And of course that's significant, and I'm concerned about what the federal government is doing in terms of raising the cost of doing business, and that's not a good thing. Of course in California we're seeing the state doing much the same, raising the cost of doing business via regulation. Low consumer demand was the second biggest concern, and that's at 1/5, about 20% named that as a concern. And finally, the third biggest concern is rising interest rates. 13.3% of the survey participants considered that the biggest economic challenge. So all in all, it was a good economic report. Now what do you watch for over the next month? And it is going to be an important month. So keep an eye peeled for what's going on. What's going to come on September the 4th, that's this Friday, is the August employment report. And it's the last employment report before the Fed meets. The Federal Reserve meets on the 16th and 17th of this month, September, and that's very important. So they're going to be looking at that employment report, and they're going to be looking at the inflation gauge, which comes out on the 16th. That's the first day of their meeting. So they'll meet on the 16th and 17th. They'll look back at the employment report for August, which comes out September the 4th. They'll look at the inflation gauge that came out on the 16th. That's the first day of their meeting. Very important. And then finally, keep an eye on what they say when they announce their ruminations, what they come up with, the Open Market Committee on the 17th. I'm now expecting no rate hike. Now, I've been on record saying rate hike, rate hike, rate hike. Now they're backing off. Big mistake, big mistake. I think they need to be raising rates, not because of that rate hike would be good for parts of the economy, but it gives a strong signal to businesses about how well we're doing. It also would push some businesses and some consumers to begin buying again, thinking that rates are low forever. They'd say, well, maybe rates are going to be higher. Maybe I should buy that house today. Maybe I should build today in terms of businesses. Now, what are the chief risks going forward? Number one, I hate to say it, it's crazy, Chinese stock market. And I said that last month, I think, and it actually came about. I think it's going to continue to be. It's a market. I don't even think it should be called a market. It's really not a market. It's the Chinese government manipulates that market, but it does come back to the U.S. shores. So keep an eye on that. Watch for the volatility there. So not so much the direction, but the volatility, the ups and downs. U.S. stock market, unfortunately, we're going to have to keep an eye on that. It's still priced a bit high. We could see some real volatility in the U.S. stock market. And finally, look at the growth of the Chinese economy. We just have a hard time gauging that and what's going on there. They're saying their growth is down to 7%. Oh, we'd die for 7% in the U.S. That's more than 3 times what we're seeing in the U.S. And I have some doubts about, is it really 7%? But it's still positive, but it's down significantly. And of course, that comes back to our shores in terms of selling abroad, selling in Asia. That's down. It comes back to us in the form of lower exports. And it also comes back to us in the form of them reducing their interest rates, reducing the value of their currency, which puts some real pressure on our economy. And keep an eye on that. All in all, again, that's it for the month of August. Here I am, Ernie Goss, speaking here on behalf. I'm a research faculty member here at Craig School of Business at California State University in Fresno. And until we meet again when I come to you on the first business day of October, may your economic cup runneth over, and thank you.